Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, March the 23rd, and wanted to just touch briefly on what markets did last week. The only positive index last week was the S&P 500, as we saw a big flight to safety last week. Really, the only thing that was working in the markets in general across the board was large cap tech, which held the markets up, and the S&P 500 finished the week up last week 1.43%, but the mid cap index was down 3.19%, and the small cap index as measured by the S&P 600 was down even worse, down 3.3%. So you saw investors flight away from illiquid assets to more liquid assets, stronger balance sheets, not as much exposure to regional banks, and you saw all of that happen last week. And as we entered into this week, all eyes were on what Chairman Jay Powell was going to do and what the Fed Bank was going to do in their meeting on Tuesday and Wednesday and subsequent press conference yesterday afternoon at 2:30. And what the Fed did is they did in fact raise rates a quarter basis or 25 basis points or a quarter of a percent. Was what the market was anticipating. And they did take out verbiage of ongoing rate hikes and things along that the equity markets were looking to see. The big takeaway on Wall Street is that it was a non-event from what Chairman Jay Powell said. And in fact, as we enter in today, the market was up significantly higher this morning, up over 400 points on the highs. And as we speak around 3 o'clock, it's right around the flat line. So it's given a lot of that back, as fears have come back into the markets over the fear of the banking system, and that there wasn't enough done by the chairman yesterday to provide comfort and safety that the banking system is going to survive the pace of these rate hikes that we've seen. And you have seen a severe pullback today, and you've seen sell-off in regional banks specifically. Now, one of the things that we wanted to talk about was, should the Fed actually raise rates this week 25 basis points? And we, in fact, don't believe that they should have done that. The impact that we haven't felt yet of the shock to the banking system hasn't been felt. And one of the things that I really wanted to touch on is that when any type of event happens like this in the banking system, it is very deflationary in nature, meaning banks don't lend as much, consumers borrow less, and that causes demand to come down and the velocity of money to come down. And it's doing the Fed's job essentially for itself, where it doesn't have to raise rates to stop people from borrowing money. Banks stop lending. People stop borrowing on fears that they're not going to have a job. Just today, Accenture has announced a big layoff, and several other companies have announced large layoffs. So as this is all happening, what the Fed is doing is working. You're seeing more and more layoffs being announced. You are seeing slowdowns being anticipated. Now, where's the silver lining in all of this? Well, we believe that the Fed probably just did or is going to do one more rate hike, and that is it. That allows us to have a clearer landscape of what growth can look like over the next 6 to 18 months. Because remember, with the stock market is a forward-looking vehicle. It's sometimes very disjointed from what the current economic factors are happening today, because it's pricing out the future. So if you've looked over the course of this year, if you've been in the value sector, if you've been in value stocks, you've seen a very flat year to a slightly negative year. Meanwhile, you have the NASDAQ up around 12% year to date. Why is that? Well, they are pricing in that the Fed is going to be done with rate hikes, that growth companies will be able to return to high growth rates, growing at a pace higher than the growth of the overall economy and the GDP of the United States. So as always, if you have questions about how to navigate this time, call us. And if you have comments that you have about what the Fed's doing, we would love to hear your thoughts on what the Fed's doing and if you think they in fact have gone too far. So as always, give us a call. You can reach us at 904-346 3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. We'll talk to you next week. Thanks so much.